Bonjour.
Good afternoon, my name is Pierre-Henri de Montagne. I'm director of the magazine Challenge. Very pleased to be with you today, and for the next 54 minutes and 49 seconds, I have a timer here with me. We're going to talk about inflation and savings, the impact that inflation can have on savings, and particularly on the investments and investment flows. I'll give you a quick introduction to our guest. We have Céline Gimay from the Cercle des économistes, who, as the tradition dictates, will give us an introduction. We have Gérard Beckerman, who is the chairman of AFER. Isabelle Mathias-Lago is a group chief economist from BNP Paribas, and Mr. Chao Tsong, who's from the Bank for International Settlements, which is the central bank of all central banks. And finally, my neighbor, Valerie Moy, who comes from Mexico, where she is the general director of the Mexican Institute for Competitiveness. So it's going to be very interesting. We're going to have people from France, Europe, and also from the international scene. I'll hand over straight away now to Céline, because we have about we're going to have 20 minutes of questions and answers at the end of the session. Thank you very much. Hello, everybody. So we're going to talk about savings and inflation. These are two mechanisms which it's difficult to compare. Inflation is the general trend in prices, and we forget that it can act as an invisible tax on savings. The mechanism is quite simple. When prices increase more quickly than the interest rates, purchasing power of savings goes down. In theory, prices and interest rates should go up at the same rate, but in fact, in practice, there's always a period of adaptation, because it takes time for the central banks to react, and for the commercial banks and the merchant banks and the markets take time to react. So this means it can have a negative impact on the real yield of savings. The agents involved don't necessarily realize straight away. They see monetary illusion. They see their savings in the nominal amount, which hasn't changed. But savers don't realize that with the same amount of money, they can acquire less goods and services. So a study has been carried out in the United States in 2022, which showed that inflation caused losses $1,800 billion of purchasing power on American citizens' deposit accounts. How can we explain this phenomenon? What are the mechanisms of transmission going from inflation towards savings? First of all, we have to differentiate between the different types of savings. You have short-term deposits, you have current accounts, you have fixed-rate bonds. These are the most exposed because their interest rate is low or even zero. Some people see real estate as an opportunity to be protected from inflation, but this will also depend on the property market that you are in. Then you have shares. Shares also can be an interesting way of protecting yourself against inflation, because in the long term, companies tend to pass on the rise of their costs into their prices. But in the short term, they tend to be subject to movements due to the economic context. Finally, you have indexed products are the most effective, but they're also the least accessible to the general public. We have to remember this mechanism is not the same for all savers. Households who have a lower income will assign a large part of their budget to consumer goods such as food, energy, which are items where the price rises are considerable, and this weighs down their budget and has a negative impact on the savings capacity. In the same way, if the fiscal framework doesn't adapt, the increase of prices will cause an increase in taxation on some of these savers, whereas in fact their purchasing power has not increased. So again, this will reduce their savings capacity. There's also what we call a redistributive phenomenon. When inflation has not been anticipated, it's the creditors who will be penalized the most, whereas the debtors will see their real debt go down mechanically. And this is the same for the government. So we can deduce from this that in a period of inflation, savings will go down in value. But in fact, it's the opposite that happened during the last inflationary period of 2022. So how can we explain this paradox? Well, it's due to the fact that we have to distinguish between savings stocks from savings flows. Savings stocks are the assets that have already been acquired, which are subject to inflation. The savings flows are the amounts of money that savers put aside every month and which will tend to increase in a period of uncertainty as a precautionary measure, especially for savers who have the highest income and therefore have a greater savings capacity. On the international scale, we also see a reorganization of the portfolios of the investors during an inflationary period. They will tend to no longer invest in traditional assets which have a lower real yield for the benefit of index products which are refuges, such as gold or crypto assets. But then again, it's not only the price of the assets you have to look at, but also the currency in which they are denominated, because inflation will also have an impact on the real exchange rate. So, to conclude my introduction and to open up the discussion, we can say that regardless of how we position ourselves, there is one question that is predominant, which is in an inflationary period, which is the best type of investment which we can have the most trust in. Thank you very much, Céline. That was very clear. Thank you very much. It's not an easy subject to present, and you have a very, very good approach, which is easy to understand. Another economist next to you, Isabel, who is an economist not from a university, but who comes from the markets. She gives a brief every morning to the BNP Paribas market rooms. So it'd be interesting if she could tell us a little bit about the information she has, especially over the last few days. We've seen inflation in France, which all of a sudden has gone down below 2%, whereas a few weeks ago you were saying that it wasn't necessarily the panic, but there was a bit of concern. We've now seen the European Central Bank, which has increased its rates. And now Madame Lagarde held a meeting of central bankers in Portugal recently, and she hasn't said much about the subject, and the next meeting is the end of July. So where are we now? Céline was talking about a transition phase. Are we in this phase of transition? And how is that going to end by the autumn, for example? Well, thank you very much for that question. Hello, everybody. It's a good week to talk about inflation. A few days ago, we had the figures for inflation in the whole of the Eurozone, and indeed, we can breathe a sigh of relief, I think. Not completely, but as a reminder, we ended 2025 with inflation at exactly 2%, and then in March, because of the very big increase in energy costs, inflation went back up. So last month, in May, inflation in the Eurozone was up to 3.2%. So more than 1% more. Let's remember that the objective is 2%. That's the target. This is supposed to be the level at which this is supposed to be the normal situation. So at the end of May, we're 3.2% inflation in the Eurozone. So the European Central Bank was very worried. So they decided to increase their interest rates by 5 basis points at their month in the end of June. And then at the peak, we're now starting to be very low. We come down to 2.8% for the month of June. Of course, this is still well above the target, but it is a quicker decrease than had been expected by most observers, which is mainly due to the fact that the oil prices have gone back down much more quickly than expected. And in fact, they've come down virtually back to the same level as before the war. So the question is, What's going to happen now? Are we going to go back down to 2% or not? And here, I'm a bit skeptical about this. We can't be certain that oil prices will remain so low. We think this is probably not going to be the case. There's an immediate effect of relief at the moment, but it's going to take several quarters to get traffic back to normal in the Strait of Hormuz and to get oil production back to normal. The only thing that's happening at the moment is that the hundreds of oil tankers that were stuck in the Gulf have been able to get out. That's a big relief, but there's a major risk that this will come back up again by the end of the year, whether it's oil prices or gas prices, and also the ceasefire is not really complete and it's not completely respected. There's also a geopolitical risk premium, which means that this decrease in oil prices is not something you can really count on. And also there is considerable tension on food prices. There is a fear that the dry period we've just gone through is going to have a negative impact on crops and harvest, and also have the El Nino phenomenon, and which a number of specialists believe could create inflationary pressures on food as well between now and the end of the year. So all of that just to say, although we're breathing a little easier now, and the ECB is not so certain that they need to increase the interest rates again, everybody who was at Sintra in Portugal the last few days at the central bankers meeting decided that they don't need to necessarily have an interest rate increase straight away, but this is not certain. We have to remain vigilant. Just a little question. Since our subject is inflation and savings, you run a very big retail bank. What is happening with the BNP Paribas customers? Where do they put their savings? What happens? What has been the impact? Is there a monetary illusion? Is nothing much happening? Or on the contrary, perhaps in their investment flows, has there been an indirect impact? Well, the flows correspond exactly to what Céline explained just now. There's no real exception to that. We have observed indeed that during the previous inflationary surge starting in 2022, we saw an increase in savings rates, but no particular change in the way the savings were allocated. This is the tragedy in a way, because historically savings, and in Europe and including France, of course, is invested in a very liquid and low-risk way, and doesn't generate a very high yield, doesn't really offer much protection against inflation. And so unfortunately, during this latest inflationary period, these trends were confirmed. I can come back to that later if you like. We can have a very good transition as Gérard Beckerman. You, among your many roles, we should remember that you are an economist also, and above all, you are the chairman of a very big savings association. I would like to ask you the same question. What is the impact of inflation on your affair members? Is it really that serious that all of a sudden you have inflationary surges or not? No, not at all. Let me come back to the title of these meetings. How do we navigate in a world that has no landmarks? That's why I agreed to come, because it was a very nice title. A little bit Proustian, but it's a nice title. Then I have been asked to talk about the links between inflation and savings. There aren't really very many. I'll explain to you why. Economists, and we had a confirmation of this today, with two brilliant economists and members of the Academy, a woman who observes the markets every day, I imagine. They have an approach of inflation which is an accountant's vision, which is not a very particularly beautiful species. because inflation, we control inflation. If you go to the United States, who play a decisive role in inflation around the world, in the United States, it's very simple. You have a Federal Open Market Committee, which is part of the central bank, the Fed, ever since 1913, which watch two curves. First of all, industrial production and inflation, the monetary mass, if you prefer. And so from that they deduce the following. When the monetary mass increases more quickly than the products, you have to increase the federal fund interest rate, which is central bank rate, and vice versa. And so there's a whole mechanism, there's an accountancy of inflation, which is pretty much under control. And savings, really, they undergo inflation, but I'd like to come back to the question that is being asked. Is inflation a threat for savings? It's not inflation that is a threat for savings. I would say it's everything except inflation. What's the thing that is a threat to savings is the awareness by savers that they are in a world that is over-determined, over-informed by networks, and where there are fewer and fewer landmarks. This is the title of this symposium. How do we make decisions in a world where we have no bearings or no landmarks? I think inflation is only a small cause in relation to a big problem, which is the behavior of savers. Because according to the accounts of the nation, the statistics of the Bank of France, just to talk about our country, France, we have savings which are a little bit less than 7,000 billion euros, about the double of our GDP. It is increasing, even when inflation increases, even when inflation goes down. But the interesting thing is not really the savings. For me, what counts are the savers, the people who are saving the money, not the savings themselves. They are unbalanced. They have a compass that they watch, the press, the media, the information they receive. They're very exposed to all of this information. What is the point of having a compass when you don't know where to go? The real risk is not inflation. You know, in the 19th century, there were great economists who wrote political economy dictionaries, such as Say or Coquelin in France, who said they didn't use the term inflation. They talked about inflammation. It's only around 1870, 1880, that people started to talk about inflation. It meant the same thing. It meant something that's going out of control, an inflation of prices, a swelling of prices, and the real guilty party is not the increase in prices that, thanks to our wisdom and skill of the European Central Bank and the federal bank that we are able to control, and as the professor said just now, and as Keynes said, we shouldn't be a victim of the monetary illusion and think in real terms. You should divide by the price index. That's elementary statistics. And that means that savings continue to provide a good yield. The important thing is to look at the behavior of savers. They are perturbed by another form of inflation. Do you want me to tell you what it is? It's not the increase in prices, because the increase in prices is something we can control. And over a period of time, 1 year it goes up, one goes down, then it accelerates and then it slows down. We're able to manage all of these trends and movements. What we cannot manage is another form of inflation, which is a major issue. It's almost like a cancer. It's the inflation of amendments. the inflation of laws which constantly destabilize the rules. In other words, we are lucky because we have a regulatory framework that is very well structured, very well thought out by men and women at the Ministry of Finance. What I observe that there are permanent temptations by the politicians. We often talk about this political, regulatory and fiscal political instability, which is preventing people from making decisions. Yes, it's the behavior of savers is afflicted and affected by the fidgeting of some politicians. And if savings is continuing to increase, it has to be given a channel. It's all very well talking about BNP Paribas, which is one of the most prestigious institutions in France, in Europe, sorry. We also have to remember to give a meaning to savings, and we mustn't forget associations such as the one I represent. We'll stop there, Gérard. We'd like to broaden the discussion of this discussion with the Bank of International Settlements. If you're not familiar with this organization, I recommend you take a look at it on internet. It's institution, maybe sometimes people say it's the central bank of central banks. So Samantha Tao Zhang, who is a former member of the IMF, is going to give us a global vision. I'd like to ask you, you study the investment flows right around the world. For the time being, our three speakers have said inflation doesn't really have much impact on savings. How do you see that? What is your vision of that? And I also like you to react to something else. Your head economist in the latest annual report, when he commented on the annual report a few days ago, he used this term that was used a long time ago by Alan Greenspan of exuberance, talking about what is happening on certain markets. I'd like to know whether there is some concern at the BIS in that area. So 2 questions for you.
Thank you very much. And it's my pleasure to join the discussions, and I'm very grateful to the organizers for having me here to join this very distinguished panel. So I think the theme of this discussion, inflation, threat to savings, is very timely subject. I would like to approach these issues in 3 simple, not simple, but straightforward questions. The first one is why we care. Second one is what is the reason behind the inflations. Third one is what can we do about it. So let me start with the first questions. Why we care. I think as all of us know, if you think about a story of Apple, if you use $1, €1 to buy an Apple today, and if prices rise, then of course tomorrow you have to spend more euro to buy 1 Apple. That's very simple as it is. If you have a saving in your bank account, €1, then which means you buy less and less, or fewer and fewer goods and services. That's why you care. So I think it's very simple for each of the household and or firms. And so pretty much that's the logic. And inflation is a threat to savings because the savings it steadily erode their purchasing power. So using our terms used by economists. So now, what is the reason behind the inflations? What caused inflations? And this is important. because without understanding the reasons, then it is very hard to understand what to do with it. Basically, in theory, we have sort of two kind of reasons. One is from demand side, the other one is from supply side. Demand side, when we say we have excessive demand, then the price will be pushed up. Then normally, the central bank will do is try to raise up the interest rate to cool down the demand and to make the demand matched with supply. That's sort of straightforward story. But there's another kind of reasons which is from the supply side. The supply side is when you have all of a sudden the shock on the supply side, then the price will also changes accordingly. And this is very important today because overall, the moderator asked me what is the global view. If you look at what's the situation going on around the world, we are experiencing a series of supply shock. This is first of all, of course, the COVID pandemic shock. And now we have what's going on in the Middle East, and the disruptions of traffic through the Strait of Hormuz remind us the tremendous shocks in terms of the supply, whether or not this is on supply of the good or commodities or is on logistics. Why this is important? For example, I came from Asia. Asia, for any 10 ships which transiting any of the oil or commodities going through the Strait of Hormuz, 8 ships with the destinations going to Asia. So the supply shock is very much felt by the Asian economies. And of course, the shocks go beyond the gas or oil. It goes to fertilizers, going to petrochemicals and other important input. So not only this will raise the energy prices today, but broadly speaking, it will make inflation very much possible, persistent in terms of the cost pressures for tomorrow. Now, so with these two kind of things distinguished from each other, let me conclude with what to do. And well, this is a very complicated story. For household, for firms, I think the chair asked the questions: what to do with savings, what to do with the investment, what forms of the savings. I think this is up to the household and the firms to decide. From the central banker's perspective, what we really care is how to make sure the price stability will be there, which means our job is to make sure we have price stabilities, and plus, of course, on top of the financial stabilities. But what to do? In the case of the demand shock, it's easy for us. We just raise the interest rate and cool down the demand. But in the case of the supply shock, and it's a little bit complicated. On one hand, if you have a supply shock which only impact the relative price in the short term or for only on temporary basis, then it's better for central bank to wait to let it pass through or look through. However, I mean, this is the best response because if you raise the interest rate, that will dampen the output. But on the other hand, if the supply shock caused broad-based and wide-based price changes, which changes the people's, particularly the household investment firms, the expectations, then we'll have to be a little bit careful. because once the expectation changes, that will impact on the wages, that will impact on people's decisions in terms of the price settings, including many of the policy measures around. Then it is the time the central bank have to move precisely and timely. So in short, this is the questions need a very, very careful reading on the numbers. Isabel just elaborate on what's going on with ECB. I'm sure this is also with other central banks. So to cut it short, so the number one job for central bank to do is to make sure the price stability will be there. I think and then they have a wide and cautious, careful reading on the numbers coming out. Let me stop here.
Merci beaucoup.
Thank you very much. In summary, there is no real link between inflation and the evolution of savings, even if there is a loss of purchasing power from the saver, which is obvious. And you've just explained that measures by central banks are effective and efficient if there is a shock on the demand side, but in case of a supply shock, as is the case at the moment, the situation is much more complicated for central banks. So our topic is complex. Let's now give the floor to my neighbor who comes from Mexico. One topic we haven't broached yet. I think last year, if we'd organized this roundtable, we would have talked specifically about that topic, but currently we only talk of the Strait of Hormuz. Last year, we were a day after the day in April that President Trump called Liberation Day, which is a trade war that led, of course, to a huge inflation, or had to lead to a huge inflation. It wasn't really the case. And since you are a neighbor of Donald Trump, Mexico is directly impacted by his measures. So what was the impact for a country like Mexico, whose economy is fully integrated within that of the US? What was the impact of that Liberation Day?
Thank you. Hello for your question. Happy name, no? Liberation Day. Liberation from who or from what? Suddenly the United States presents itself as a victim of the world, which is, I mean, at least for me, it was really funny. When we saw Liberation Day, because of course since I'm an economist, I was very much aware of what was going to be announced that day. I was, stuck to the TV watching the presentation and, these tables in a very entertainment way of presenting the taxes, the tariffs that he was going to impose into different countries. And suddenly I realized that Mexico was not included. So in Liberation Day, Mexico was not included. Despite he complains all day about Mexico, Mexico was not included in his liberation, so he didn't liberate from Mexico at that moment in time, nor with Canada, because of course we have a free trade agreement. We have a long-standing free trade agreement since 1994, a very important trade agreement, and actually yesterday it was supposed to start a new phase of renegotiation. The President of Mexico, Mrs. Claudia Sheinbaum, as well as the Prime Minister of Canada, formally they expressed their intent to continue the accord for another 16 years. Whereas Mr. Trump decided, or at least put a post out there, it was in no way formal. It was kind of formal with Jamieson Greer, the USTR representative, that he was not willing to sign the agreement or to re-sign the agreement for the next 16 years, so that he was going to keep the statu quo and let's see what's going to happen, and in that way he keeps the threat. However, he has imposed several tariffs on goods that come from Mexico, especially goods that come made with steel and aluminum. And that tariff is really big, it's 25%. Let's bear in mind that around 82% of the trade that Mexico has with the US is tariff-free. because it goes through the rules of the USMCA. So it's with zero tariff. But he imposed under this national security argument these tariffs to aluminum and steel that, of course, we, Mexico and Canada, argued that are violators, they are violating the USMCA. But now, who is paying for those? Because the question is, and inflation, what's got to do with inflation? Tariffs are a tax that is ultimately paid by the consumer at some point in time. So at the beginning, the consumer, or at least the importer of the goods, tries to absorb part of the tariff as much as it can, and eventually it will start trespassing that tax to the consumer. So we're not seeing an increase in prices in the US, because that's what we would expect. We wouldn't expect an increase in prices in Mexico, but because the tariffs are for them. So we're not seeing an increase in prices in Mexico. Actually, inflation is going down, and we are
What is the rate?
The acceptable rate, I mean, in the European Union is 2, in Mexico is 3, plus minus 1. So we can be in the range to 2 to 4. So we have a range, and we are within the range. But bear in mind that our nominal rate is 6.5. So we do have a positive real interest rate. So we're not seeing an impact on prices from the tariffs that Donald Trump imposed. And they, in the US, they are not seeing them yet. That doesn't mean that they won't face inflation eventually. And maybe that eventually will come sooner rather than later, because he will have to pick his battles. And one of the battles that he doesn't want to pick is the battle with the obsession of Americans to change car every single year. So he needs to take that into consideration, and he will eventually reconsider the tariffs in order for the American consumer to not face a larger inflation than the one that they're facing right now.
Merci beaucoup, Valéria. Alors, il nous reste 17 minutes. Alors, ce que
Thank you very much, Valeria. We have 17 minutes left, so Céline, what I suggest, I know this is an impossible exercise, but let's maybe briefly summarize, conclude what was said, and then maybe we can discuss with the audience. With great pleasure. Several things were said. For example, the fact that inflation was diminishing in the last month due to maybe a potential settlement of the conflict in the Strait of Hormuz. We do not know exactly whether or not that trend will prolong itself on the medium and long term, which creates uncertainty which is worsened by the new tariff policies coming from the US, which redistribute or reshuffle international trade. It's been said also that we are still undergoing war in Ukraine. So all these factors generate uncertainty and push savers that can do so to save more out of a precautionary approach, because they anticipate that the future will be difficult. Is that a bad thing? No, it is not. It's quite a good thing for a country to have a large amount of savings. For example, it is the case for France. It is a good thing if and only if that savings is well allocated, if those savings can be used to take up the challenges in the country in terms of environmental transition, in terms of AI funding, in terms of inequality reduction, for example. So the fact that savings increase is not a bad thing. However, now we have to see how those savings will be used. Can it be beneficial to the countries? It can be, depending. I do not resist the temptation to ask Gérard Beckerman to react. You have a lot of savings. What you do is you buy French debt, basically. Is it reasonable Or wouldn't it be better to invest that money in industries with a lot of added value like AI? I know he might react violently. Beware. What's not reasonable is to not use it, that's for sure. But you know, inflation is not a bad thing for the state, especially when it is not accompanied by an increase in rates. When we are a debtor, we benefit from inflation, and the first debtor is the state, and we lose during an inflationary period when you're a creditor, which is why in the accounts of the nation, usually we talk about net and gross savings. It's very important. So what do you do with your billions of savings coming from French debt? No, what we do is a lot of good. We have about 60 billion. What is it being used for? I would like to talk about national life insurance, 200 to 300 thousand billion. It's very important, and it was said by the professor earlier, and we do it at our own level. What is the goal behind all of these savings? When I mentioned 7,000 billion out of it, we have 2,400 billion for life insurance. What's the point? As you said, the state, that's a normal thing. It's necessary because behind states you have roads, you have bridges, police, education, justice, when it works, justice, the police, and defending the territory. So the state is normal. It is a necessity, especially in a country like France. And then there are other goals behind savings. For example, youth, employment, new technology, AI. Gérard, please. Out of the 60, how much is for the state? 35% for the state, and luckily, as much in the shape of credits for large or smaller companies, another 40% for small and medium enterprises. So that savings mass is not sterile, it is productive. I've forgotten the name of the MEP who wanted to add a tax on non-productive wealth, and I've forgotten his name. And he did not know the reality because savings is very productive. He was out of the Modem group, he was from the Centre Party, but he is as reasonable as an insoumis, a far-left group in France. If we have a few minutes left, we can take 3-4 questions in the room. If you want to ask a question, please ask a brief question, and our panelists are at your disposal to answer them. Are highly indebted states is in their interest to have high inflation, to have their debts disappear? Well, all depends on the rates and how much they increase. So the inflation, when it is accompanied by an increase in rates, that's not good to reimburse the debt. And let's not talk about reimbursing the capital. The state is not reimbursing capitals, it's only servicing the debt, and it represents a lot, about 65 to 70 billion. It's more than the budget for the army and for education. In the Bank for International Settlements, is that something that you check, the way that states service their debts?
Well, the inflation, as we know it, is a matter of about the what the impact on the saving is. The
Maybe your microphone. No, you put it near your mouth.
Okay. As we know it, the impact, the inflation on savings, which is just elaborated, and it's at the end of the day is basically talking about redistributions and uncertainties. So when we, from central bank perspective, as I said early on, the number one job is make sure the price stability will be there, which minimize the uncertainties so that the firms, household can make their decisions better. On the other hand, with a high debt, pretty much around the world this time, the public debt reached a historically high level, which posed the risk for central bank to conduct their monetary policies. we, from central bank perspective, the higher debt basically minimize the policy rooms for monetary policies. That's the main concerns, and of course with the higher debt, and particularly now the interest rate is stay high in some of the advanced economies, and the debt service burden is still there, which makes the fiscal policies don't have much room to respond if the supply shocks continues. We are pleased some of the development in terms of positive development in terms of what happened in the Strait of Hormuz, but we don't know how long it's going to last. And nevertheless, during the last few months, some of the not only there's the freeze in terms of the shipment, but also some of the infrastructures, port, everything's got damages. It need time to repair, and some of the fertilizers, impact on fertilizers, on petrochemicals. These takes the lag effect. So down the road, there's still some way to go before the things getting normalized. So as we're looking at the outlook, the outlook looks like that promising. So we need the fiscal authorities working very closely together with monetary authorities. So this is the situation we are facing too.
Merci beaucoup. On va prendre une...
Thank you very much. We'll take another question. We could spend 2 hours talking about this. It's frustrating for everyone, but these are the rules of the game. Are there any other questions in the room regarding inflation, regarding prospects and savings? If you don't have a question, I'll ask one. Let's say I've just inherited. Where should I invest my money right now? If I may, I'd like to answer differently. Well, you've talked about debt service. Are you about to talk about debt servicing? No, absolutely not. But I just wanted to make this point. I wanted to come back to the question of how do we allocate savings? Philosophically, I find it difficult to be among panelists and telling savers, here's where you should invest in energy transition, in youth. I think it's up to the saver to decide. However, what's very clear is that investing your savings in investments that have a higher return, higher yield than inflation is crucial. And it is crucial for the very reasons that Tao Zhang gave. On the contrary to the decade that was the decade before the pandemic with no inflation, we are in a period with probably positive inflation in the long term. Let's look at the period starting 2000. The yields from investment of North American savings, that's about 5%. The same figure for European households is 1% yield. It's striking. Are we talking about nominal yields outside of inflation, corrected for inflation? Yes, absolutely. So North Americans have room to maneuver and Europeans much less. It's crucial to understand because usually wage income is eroded much more by inflation than other types of income. Do you know that real actual wages in Europe are 5% lower than what they were at the beginning of 2020? So we haven't gotten back to the pre-pandemic level of income, of wages yet. So that question of where do we invest, how do we invest is essential. And I'll come back to what we were saying at the very beginning. One of the issues in savings in Europe is that it is very little institutionalized, and there are way less assets being invested for the long term, about 10 times less than in the US, and that contributes to difficulties in funding in Europe, and it also contributes to the fact that European households do not benefit from yields allowing them to earn more than inflation, and I think that's a huge issue. Are there any questions? Please go ahead. Please wait for the microphone. Hello? That's very interesting. I know nothing about finance, but inflation, we've felt it, and financing, we also know what their yields are after the fact. So if I want, let's say, ETFs or other types of investment, it's usually after the fact that we know what the yield will be. When I looked at investment advice, it said in the last 5 years, in the last 3 months, but it doesn't give me information for the next 3 months or 3 years. What will be the events that will be happening? I don't know. I don't know any of that. So what is your question? Is it, are there ways to have investments with guaranteed rates, for example? Well, yes, but as we know, when rates are guaranteed, they're way less interesting than other types of investment. So let's give the floor to the trader here. Well, there are no traders at Affaires. Affaires is there to defend the legal and fiscal status of life insurance. So you announce your rate for a certain time period. For the new product, we announced 4.5, and then considering inflation is much lower, luckily. But I want to come back to what you were saying earlier when it comes to the state, because it is an important player in the savings market. Inflation can be a good thing for the stock because it reduces the accounting expression of the debt cost, but it is detrimental to flows because it makes the annual cost of interest payments higher, which is what Céline was saying earlier. There's a difference between stocks and flows. But we shouldn't be pessimistic concerning savings. Savings has strength. First of all, it's a privilege. Millions of French people do not have that privilege of having savings, firstly. And secondly, we have to respect it when there are other categories of French persons that have seized that opportunity because they haven't consumed everything, they haven't invested everything yet. So what we want to see, well, firstly, price stabilization is a good thing, but rules stabilization is even better. Very well. Céline, very last conclusion. Just to answer to the question and make a comparison, the question you're asking, every single investor is asking that question, and which is why in the investor's portfolio, there's a share that's supposed to be the non-exposed share, the low risk. It's usually allocated to what we call refuge values, which is why in instability periods like this one, certain products like gold have a value that's increasing specifically to protect ourselves. And we are in a world without bearings because even gold has fallen for a few weeks when everyone usually thinks that considering the geopolitical context, its value should be increasing. So we truly are living in a world without landmarks and bearings. Thank you for giving us a few directions. Thank you to our international French speakers as well, and thank you, of course.